session. Today is the 14th of November and you are joining the live market analysis session for FX and CFDs. Right, so just a quick rundown for those who have not been here before. What can you expect from these sessions? So really it's something that is pretty different from the educational webinars we typically do. Right, what you'll notice later as we introduce the speaker is that he will jump straight into key actionable trading opportunities that covers major FX pairs, US indices, and certain precious metals. Right, what's different from this session is also that you get to interact with our speaker today, which is professional trader Ang Kar Yong, through the questions that you will ask throughout the session. So there is a chat box function for you to input your questions. I highly encourage you to use it because, in these sessions, that's how we learn, right? So don't be afraid whether the questions you ask is too easy or too difficult. I think different people are at different starting points and different places in their journey of trading. So your questions definitely will be able to benefit those who are in these sessions as well. So feel free to ask them any questions on the market, strategies, risk management, psychology, and so on and so forth. In this session, you can also stay up to date with exclusive developments here on Phillip MetaTrader 5, which is the platform we'll be using to demonstrate later on, and also giveaways and promotions that are limited to only attendees of the session. So that I'm extremely excited. Stay till the end of this session to find out what that is about. Right. So a quick disclaimer before we jump into the session is that whatever we are sharing today is not investment advice. It's not telling you exactly what to buy or sell, but each person has a different financial situation and we do not take that into account, especially your investment objectives, your financial situation. So should you wish to start investing, please seek advice from a financial advisor, right? So a quick rundown on our platform, Phillip MetaTrader 5. We're very proud to share it is one of the most comprehensive MT5 in Singapore today, with over 650 contracts available, ranging from Forex, precious metals, and CFDs, including indices, single shares, commodities, cryptocurrencies, and more. Right, so it is fully zero commission. So this is something that makes us stand out as a MT5 platform with so many assets that is also zero commission. So this includes share CFDs as well. So we do offer very competitive spreads for many of our contracts. If you look at our majors, you notice that our spread starts from 0.6 pips at zero commissions. Right, so we do understand the need for smaller account sizes for those who are starting out in their trading journey, or who are starting young in their journey and require a smaller size made available to them. So we're happy to share that this is also something that we do, right? For indices, we have micro sizes available, right? And for shares CFD, you will notice that it is available in as little as 1 share. So what does this mean for you as a trader on Phillip MT5 is that with a smaller account size, you still will not be restricted in the assets that you can trade. So the amount you have deposited in your account can go further. Of course, if you have more in your account, you will be able to taste different asset classes as well, right? Aside from that, we are a very collaborative platform. We partner many tools that are out there. The reason why we do that is so that it can cater to the needs of different traders and different needs. So we have tools for technical traders, we have tools for fundamental traders, and last but not least, we have a strong support team available through all trading sessions. So if you don't have a demo account already, scan the QR code and you will get a free 30-day demo for you to try out our platform. Right, so on to our speaker for today. So Kar Yong is no stranger to those of us who have been in this session for a while now, right? He has an impressive track record. He has turned a humble US 500 to 13,000 at the age of 21 within a span of 2 years, right? And due to this success that he had, he was featured in multiple media outlets. He has also been awarded multiple awards. Just to name a few, he has won the most popular FX trainer in APAC, the top Forex Analyst in Asia by WikiFX, and most recently, Best Digital Marketing Trader by Trading Live. Right, so why Kar Yong is so apt to run through this session with you today is because he has been through the ups and downs of the financial markets. He understands traders at different points of their journey because he has been through them. He understands the stresses, He understands the questions that you have in your mind. So I highly encourage you again to ask your questions today, because that's how you truly benefit from this, right? So without further ado, I will jump straight into the point of this session and why you are here for. So Kar Yong, over to you.
All right. Thank you, EJ, for the quick introduction. Okay, good. Right. So, good afternoon, everyone. We'll get started. As mentioned, we'll jump straight into the market and walk you through some of the events in terms of the week-to-week economic data releases that you need to take note of. And after which, we'll jump into the charts to walk you through some of my personal outlook, the trading opportunities available. And of course, if you have any questions following all this, feel free to just put it into the chat, and I'll be able to take a look at them and answer questions accordingly. Or if you have any particular instruments or assets that you would like me to take a look at, okay, feel free to just put it into the chat box as well. Now, as usual, okay, on a week-to-week basis, it's always important to have an overview of the week. What are some of the high impact news that we need to definitely take note of, because that's going to be kind of giving us an idea what we need to pay attention to, and then also at the same time kind of set the tone for the week, right? If you actually observe last week, we don't have much data that is very significant, okay, as compared to like the previous week. It was a very eventful one. We have Bank of Japan, we have ECB, we have NFP, and then last week we have relatively a muted one. The most important of all is just the RBA. And you start to observe, right? Last week, if you're looking at the market, a lot of the major pairs are essentially doing a corrective phase, meaning that they are kind of like in a range bound environment. It doesn't really move a lot, and sort of, right? So that's where you need to have a basic expectation and understanding. You know, this week, if there's nothing much, then the market would likely enter into a corrective phase. Okay, and of course, because last week was very much a corrective phase, this week here we may get actually some opportunities setting up that we can actually capitalize on. Okay, so if again we come back to what we have this week here is quite eventful, in particularly the GBP side of things, the UK side of things, as well as the US. Now, to get things started, right, you can see here Tuesday, right, 14th of November over here, we do have the UK Clement count change. If you're not familiar with this, this is kind of equivalent to the NFP data, right? It's the labor market data from the UK side of things. So definitely this is going to be very, very important, and it will create some volatility in the market if we can get some kind of a strong deviation from the expected data. So if you're looking at new trade opportunities, right, this would be one of it for sure. Okay. Then going into the evening session for today, we have the core CPI as well as CPI year on year. That's going to be the most important one among the CPI data. And you can see here, expectation is for it to come down to its 3.3. So from a previous month release of 3.7, this time around the economists and the traders are basically expecting a consensus of 3.3. Now, obviously, what you are trading is the surprise element if you're looking at news opportunity, right? The idea of this is people are expecting 3.3. If the actual data is going to come out way beyond that, whether is it like lower 3.0 or maybe 3.5, 3.6, that's where we're going to have a surprise element. And when we have a surprise element from what we were anticipating, that's where we're going to get that volatility spike, and the news trade strategy essentially captured that kind of move. Okay, so that's on this evening. Okay, today we have a couple of them. And if you go into Wednesday, tomorrow we have the US core retail sales as well. Okay, we do have a couple of things lining up. And then we also have the pound CPI year on year. Now, this is very interesting because if you take a look at the pound CPI year on year, last data was 6.7, and this time around they're anticipating a 2% drop in CPI. Now, that's a huge change, right? And whenever we see a huge change, meaning that the expectation is really huge, from 6.7, they are expecting a drop to 4.7, right? That's a rather huge expectational gap. Now that opens up a possibility of a good surprise element because we are expecting a big shift if the market doesn't give us that. Okay, so for example, we're expecting 4.7. If the actual inflationary data comes out for CPI year-on-year, it's somewhere around 6.0. Okay, yes, it did drop, but it did not drop as much as what most of the consensus have agreed. Okay, so that kind of built up the possibility. The bigger the expectation is, the bigger the possibility of a surprise element. Okay, so if you are definitely looking at news trade this week, there are a lot of opportunity from the UK as well as the US side of things. Okay, same thing here. If you take a look at the core retail sales from the US side of things, last data was 0.6. This time around, they're expecting a negative 0.1 number. Okay, so that's actually a difference of 0.7. It's huge, and that again opens up a good possibility where we may get a deviation, right, where the actual data release is not as expected, right? So today and tomorrow is essentially the focus in terms of event for the week. Okay, no doubt about that. And then to end of the week, we have a little bit on the Aussie labor market on Thursday morning, and then on Friday we have the UK retail sales, right? To me, that's not the most important. I think the focus for this week is very much on the UK as well as the US side, right? So, okay, I'll quickly take this question from Gary since it's kind of related to it. The question is, will it affect the euro in terms of the 3 p.m. news for the UK? Not really. Yes, we do understand that the UK and the euro is kind of having a positive correlation, but that news that you see over here, in terms of 3 p.m. Clement count or even tomorrow's CPI year-on-year, is very much specific to the UK economy. Okay, so when we trade this kind of news, the suggestion is always just focus on the particular currency itself. Like if it's a UK news, focus on pound related pair, and we don't trade the euro just because a UK news is coming up. Right, so I hope that kind of clarifies it. Good. So with that said, right, let me jump into the charts over here and to kind of walk through some of the opportunities that I'm personally looking out for, and of course the reasoning behind it so they can appreciate the analysis a little bit better. Okay, now I'll start off with I would say the pound related one first because we do have the UK news later today as well as tomorrow, right? Now bear in mind that the fundamental data can greatly shift what we see on a technical chart perspective. Okay, so my approach, for me, I'm very clear. I always say that 70% of my decision making process comes from the technical analysis, but understanding the fundamental is crucial as well, which means if the actual data release causes a certain spike or certain move in the chart, we need to very, very quickly adapt to what's happening and then take a look whether the previous analysis actually still makes sense. Do we need to actually tweak a little bit here and there and things like this? Okay, so bear in mind that what I'm sharing with you, my view, is really based on what we have right now. Okay, because I have no idea and I have no way to determine what's going to happen next. Okay, so first one here is obviously the pound dollar. Okay, you can see on the screen over here, what I'm looking at is we have a completed A, B, C. Okay, and of course, last 2 weeks, we did see the pound dollar came down pretty nicely. We call this an impulse move, coming down with momentum, really because of the dollar strength. And early, I would say late last week, early this week, we're seeing a kind of a pullback. Okay, now if you are looking to trade the 3 p.m. Clement count change, unlikely we're going to get a swing trade idea from this. Okay, because what I want to see for the setup is for this to come down a little bit more and for this to push back up. Okay, so ideally I want to see kind of like a flat three-wave structure developing. Okay, and coming towards the area around 1.23 to 1.2335, that will be the area to look for a sell trade. Okay, and this sell trade here, we're basically targeting back at the previous bottom of this channel, or we can go for extended target. Okay, or we can go for extended target and actually look for the previous low. Okay, this zone. Okay, so pound dollar over here, definitely I'm more inclined to look up for sell trade opportunity, given if we can get a pullback and then another pushback into the area of territory. Okay, and that will be a decent sell trade for us. Now, what can the GBP USD do if we don't really get this structure here, right? Especially if we have like high impact news coming in later on. Now, one way that this can develop is this can immediately continue to shoot higher impulsively, right? So maybe the Clement count change data comes in, is very positive for the pound. GBP USD may shoot up impulsively, right, with momentum. Now, if that's going to be the case, obviously we won't be selling just because the market enter into the fit zone, right? But what we'll be doing is if we get an impulsive move, okay, if we can't get an impulsive move, my analysis would start to tweak and adapt to what the market is telling me. I will not be so keen to be selling around here, obviously, but I'll be keeping a very close watch at where the previous top is. Okay, so you can see this top. Okay, previously we have kind of like, okay, my bad. Let me string this a little bit. Okay, so what we have in the previous top over here, you can see, okay, a strong V-shaped rejection. So if later on the news actually caused the GBP USD dollar to actually push higher, we'll be looking at that key zone here for a potential entry. Okay, and the setup is going to be very different from the initial one that I shared with you. We'll be looking at what we call a crawl pattern. Okay, which means that we want the market to go up and then it starts to lack the momentum and slowing it down around that area. If you can get that, then that will be a pretty nice little sell trade opportunity either, right? So if you don't get a three-wave correction towards the fib area, then we'll see if we can get a crawl pattern at the top of it as a double top structure. Okay. Now, for those of you who are not familiar how to engage into a trade whenever we see something like that, when we see a crawl, okay, we often use a breakout entry. So our technique to get involved in it is we wait for the crawl to develop, we identify a minor low, okay, and that will become our breakout sell trade entry, which means that if the market actually reverse, tag and break below that structure low, that's where we're going to look to sell, and then of course our stop loss will be at the top at the minor high. Okay, target wise, if you're looking at a crawl structure, okay, we can of course be more conservative. Okay, with various targets here, we can look at this low, we can look at the low of the channel, we can also look at the low at the bottom previously established. Okay, so pound dollar is one of the opportunity to keep watch. Okay, definitely for this week, right, with two major events coming in. Now another one in terms of yen related, the pound related, is the pound yen. Okay, now dollar yen actually kind of broke the previous high yesterday with the yen weakening again, but my take is dollar yen, I'm not too keen to it, right? Based on where the market price is at the moment, I'm not so keen to be buying the dollar yen, right? I'll be very much interested to see when the dollar yen is going to reverse, and I'll be more interested to look for sell trade opportunity. So if dollar yen continue to just rally, I'm not too interested in any buy trade there. It can go higher, but my take is, based on the higher time frame on the daily scale, we're already entering the previous significant resistance. There's no reason for me to be aggressively buying it up. Okay, so we're not going to be like focusing too much and emphasizing too much on the dollar yet. But if you're looking at the yen, I think the pound yen here may present something pretty nice. Okay, so let me walk you through a little bit. Now, first thing here, we have a three-wave completed, right? So we have A, B, and basically the market is forming C, right? And within C here, you can see also one push up, one push down, and basically we are forming the third push up. And then within the third push, okay, what we have is a crawl pattern development, right? So we have our first push up, 1, 2, 3, right, 4, and the market is basically doing its fifth wave up. Okay. So diagonal internal has a 5-wave structure, which we're seeing it at the moment, and that's great, right? So we have a couple of confluences together. We have a bigger 3-wave, okay, we have a smaller 3-wave, and within the third wave of the smaller third wave, we have a crawl structure which internally is completing a 5-wave move. Okay, so this is kind of like a lot of different factors are stacking up for a potential sell, but does it mean it's 100%? No. Okay, it just increases the odds that, okay, we'll be definitely looking at the sell trade opportunity. Okay, so GBP USD we're also looking at the sell. It's just a different price point, different structure to look for it. And then for pound yen here, we're also looking at the sell, right? So in other words, we're kind of expecting the pound to weaken, right? So take note of your risk exposure as well, right? What this means is if you're selling the pound dollar, you're selling the pound yen, you're selling pound 2 times. In the event that the trade on pound doesn't go in your favor, just make sure that you're aware that your exposure is 2 times, your risk is then double. Okay, now how do we execute this, right? Obviously you can look into a breakout, by looking at this low here, your stop loss is at the top, but that may open up a very wide stop loss, right? Because if you take a look at where the current low structure is, it's somewhere around 185.20. Okay, and if you take a look at where the previous high is around 186.30. So it's about 100 pips of a stop loss point. Now obviously on the forward chart, 100 pips on pound yen is not that crucial, not that like significant, but are there ways in which we can actually reduce our stop loss to increase our risk to reward even better? Okay, and that's where you can actually play around with what we call a multi-time frame approach. Okay, so on the 4-hour we have everything aligned. What we can do is we can go down to the hourly. Okay, and hourly we just need to wait for the setup that we are interested in, right? So one of the potential setup that can develop on the hourly is the hourly chart gives us a smaller crawl pattern. Okay, so on the hourly, if we kind of form something like this, then that will be great, right? Because that will give you the hourly crawl. Okay, so something like that, right? Okay, so the entry would then be based on the breakout of the hourly instead of the breakout of the 4-hour. So your stop loss would be definitely tighter, right? So rough estimation, if you're looking to enter with a breakout sell at 186, the stop is around 186.70. That reduces from 100 pip stop loss to just around 70, right? Now that 30 pip, don't look down on it. Okay, why is because every time you reduce your risk in terms of the stop loss pip, the increase in your risk to reward ratio actually doubled. Okay, simply because of how the mechanics work. So pound yen, okay, that's definitely one of the pair I'm keeping a close watch together with pound dollar. But I think pound yen here may present us a nearer term trade opportunity as compared to like the GBP USD, right? Because GBP USD will probably need to give it a bit more time to develop the 3-wave structure, or depending on how the price is going to move, we might look at it as a double top structure. Okay, so that's the 2 pair related to the pound. Now today you're looking at the dollar because we also have a couple of US data coming in. Okay, we have opportunity on the euro dollar side of things as well as the dollar franc. Okay, now both of this pair here, I'm looking at slightly the opposite direction for the dollar, which means one of it we are buying up the dollar and then the other we are looking to sell the dollar. Now this is the part where some traders may be a bit confused, like why are we looking to buy the dollar at the same time sell the dollar across different pairing, right? I always explain that my process is when I look at the chart, I look at them independently, right? So I wouldn't say because euro dollar chart tells me that I'm going to be selling the dollar and therefore, across all the dollar majors, I'm going to look to sell. No, I'm going to be independent based on the chart. So what the chart tells me, I base off that analysis. Okay, and I use the correlation perspective as mainly as what we call risk management, right? The exposure management perspective. So this is a good example, right? If you take a look at euro dollar over here, what we have is the market has moved up and kind of completed this potential correction. Okay, and recently it actually made a first move down, pretty impulsive in nature, and right now it's basically developing a flag. Okay, or what we call a correction. Okay, over here. Okay, so if we can get a very nice little, okay, a little bit more push to the upside, going into the territory around 1.0715, 0720, that's the sell trade opportunity that I'll be looking out for. Target wise, I'm going to look at around 1.0600, right? Again, it's a psychological number. So how can we get involved in the euro? One way here is to obviously look out for a simple sell limit. What's a sell limit order is essentially you tell the broker, this is the particular price I'm interested to get in. If the price tag it, help me to get it automatically, right? The benefit of having a limit order is that you're looking to catch the reversal, right? You're hoping that once price tags your entry, it just reverses and goes in your favor. That's the benefit, right? You can't catch the very, very top or the very, very bottom. Now, the not so positive side about limit order is that what happens if the market tag you in and doesn't reverse, right? It doesn't go in your favor. Then end up, there's a very high chance that that particular trade will be a losing one. Okay, so if you take a look at euro dollar over here, right? Can I put in a limit order around the 618 to wait for price to tag it and then, I'm going to just sell it? The answer is yes, right? Again, every decision I always highlight falls back to what is your personality, what fits you. Now, for me, my style, I like to always, looking at the area that I'm interested, I'll drop down to the lower time frame. Okay, so I already know, okay, between that 50 and 618 is where I'm going to look to sell it. Okay, then on the lower time frame, I always look up what is the setup that allows me to have a sell trade. Okay, so if you take a look at euro dollar, right, what is a potential sell trade that can form over here is what we call a crawl pattern. Okay, so you realize that the setup, the pattern, they're kind of more or less similar in the ones that I'm trading, but we're essentially just playing around with multiple time frames, adding in the context and things like that. So if we can get kind of a cross structure over here, okay, I'll be very inclined to actually take the breakout trade. Then my stop is at the top, right? So instead of like looking at a more aggressive pending limit, I'll wait for the market to come into the area, form a setup that I'm interested in the lower time frame, and then I'll trade that particular smaller time frame using a breakout technique. Okay, so that's on euro dollar. Do keep an eye on it. Again, we have some dollar news coming in today and tomorrow. What I'm sharing with you in terms of my outlook and the trade opportunity are based on what we have right now. Okay, bear in mind when the news release, some of this setup may actually change. Whether is it going to be still valid or invalid, and then we'll need to look for a next one. We really need to wait for the news to come out first. Okay, now if you are into dollar, another one that I'm looking at is the dollar franc. Okay, dollar franc has a very, very clear structure pattern. Okay, so what we have over here, you can see we have our first push. The market came back down, pretty impulsive. Spent a good 1 to 2 weeks kind of developing correctively. We have already tagged that 50 and 618 pretty nice. Okay, a small little reaction of that, but it's not that significant. And of course, we are looking at what? We're looking at sell trade. Okay, why? Because we have an impulse move, we have a correction, we always expect that down move. where can this down move likely go? Target the previous low zone, use a little bit of Fib, that will put us around 0.8890. Okay, now how are we going to get involved in this sell? Okay, so again, we can use a simple breakout, minor low, minor high, right? So that would open up a rather wide stop loss and therefore eat into the risk to reward ratio. So just like I mentioned, right, one technique that I use is we can go down to the lower time frame, look for this setup. So I'm interested in sell. That's the work that I've done. That's the homework that I've done on the 4 hour, right? So if today I want to sell on the hourly, what do I need to see? Same thing here, okay? What I want to see is a correction developing over here. So we can get an impulse correction and the sell limits, right? The sell stop breakout probably is going to be somewhere around the same spot, okay? But your stop loss can shift, okay, all the way from that previous high to the mid part of, okay, the range over here. So that's the part, okay. In terms of dollar franc, if you can get a 3-wave correction on the hourly, the breakout can be there. The stop loss can be placed, just above that range here, somewhere around that 50 mark. And we are looking at a target all the way back down to retest that. Okay, so dollar franc is another one that is a good example. You can combine technical analysis setup with a high impact news as a potential catalyst. Okay, so this one here, later in the evening, today and tomorrow, something that you can look into as well. You can even utilize like news as a breakout entry reason. Okay, and if it goes in our favor, we can write it into a swing trade. Okay, so some of this major here as I covered, definitely you want to pay a little bit closer attention to it. If you are not having them in your watch list, you may want to just add it in and find the right setup to help you execute those trades. Okay, quick one on the index, right? Both the S&P and the Nasdaq, I think equities for the past 1 and 2 weeks have put in a massive rebound. Okay, and for me, there's no reason to be selling the equities right now. I think generally the direction bias is upside. The only thing you need is don't buy at the very, very top, right? Wait for a decent 3-wave corrective pullback towards the 50 and 618 zone. Okay, and I think that would be a better time and a better price point to get involved in the buy. Okay, we do have this breakout as well, right? So it's actually pretty impulsive in the upside. We only need the extra layer of confirmation by waiting for the market to give us a 3-wave pullback. Same thing for Nasdaq. Okay, we can't get a massive bullish run, so we want to wait for the pullback before we commit to any buy trade. Okay, so for me, the US equities, I'm not interested in selling it, but at the same time, there's no reason to be buying it first. We'll probably want to just give it an entire this week, come back next week and see if we have any opportunity on the global index. Okay, now I see one question coming in is from gold, right? From Irene. Okay, since we're looking at silver, okay, very quickly, kind of like talk about the gold trade here as well, okay, from Irene. So Irene actually asked or said this, right? I sold gold at 1982, and okay, it's not a question actually. Okay, it's just basically mentioning sold it at 1982 and kind of closed that trade at 1961. Yeah, so you can make some decent profits from that trade. Yeah, okay, so great. Okay, I was thinking like you're asking whether we have another opportunity on gold. Now for me, I think gold may not give us a, okay, let me just very, very quickly open the chart. Okay, for me on gold, right, I think we may want to be a little bit more careful in the buy trade now for gold, but I don't think you want to be selling it or where it is anymore. Okay, but silver may give us something a little bit more exciting. I mean, just looking at the chart over here, right? The price retracement on gold is pretty steep, whereas on silver here is a little bit more gentler. So from an Elliott wave point of view, when a retracement is a little bit steep, that kind of like going towards more of what we call an impulsive move, you want to be very, very careful, because that means that the momentum to downside can be relatively strong, right? If today you see that, oh, this pullback is very, very kind of like gentler, then that kind of hint to us that, okay, this is a potential corrective phase, and the trend will likely continue after which. Okay, so from this perspective, you can see, right, between silver and gold, if we are looking at buy, right, so assuming we have that bullish directional bias, I'll pick on silver to actually focus a little bit more, and then gold, I'll probably be more patient on things. All right, so let me talk about silver first, and then we'll jump into gold and kind of give you some perspective on that as well. So if you take a look at silver, right, we kind of have this push up, and the market then spent, a good like almost a month to actually do a consolidation. It's basically not going anywhere, right? We call this like ding dong, going down, going up, going down, going up. But that's just really not changing in the overall structure. And then last week we came down, had a little bit of a dip into the territory of Phillip between 100 and 123. Okay, so the price level is around $22 to $22.30. We did see some kind of a reaction so far. It's a little bit early to determine. Ideally, we want to see this to go up a little bit more. Okay, kind of give us a V-shaped formation. Then if we can get that, obviously any pullback is something that we'll consider to look for a buy. Okay, so for me, precious metal like gold and silver, I'm fundamentally bullish. There's no reason to be selling them from a fundamental point of view. So from a technical side of things, I want to find out buy opportunity mainly. Okay, so like I really sold gold, right? I don't sell gold because that's not my style. When I trade both the direction, right, buy and sell, I always focus mainly on the FX side of things. Commodities like gold and silver, even crude oil, I'm more inclined to look for buy. Bitcoin, cryptocurrencies, I'm more inclined to look for buy. Indices, I'm more inclined to look for buy, because long-term perspective, those assets are definitely going to keep going higher. Okay, so that's my take on silver. Okay, now if you go over to gold chart over here, right, why I say it's a little bit complex is because when we have this top, okay, the market put in a move lower here, that's a pullback. Okay, that's another drop, and this drop here, as I mentioned, is relatively impulsive. And if you pull in your Fib, okay, extension from the high, you measure this. Okay, I'll add in the level 1618. Okay, you realize that this move down, price has actually tagged that 1618. Okay, now oftentimes if a simple trade wave move pullback, right, we don't expect the move to come towards 618. In this case, it did. So from an Elliott wave point of view, that opens up the possibility of a 5-wave pullback. Okay, 1, 2, 3, 4, 5. Because the third move here overextended and tagged the 1618. So for a simple 3-wave move, that's very unlikely. So what does this mean, right? This means that likely we're going to see kind of like, oops, my bad. Let me just remove this arrow. Okay, so it means that we're likely going to see one more drop. Okay, wave 4 to complete, and then we'll probably see wave 5. Okay, and after that, that's where we're going to get perhaps a deeper pullback or a bullish short-term opportunity. And of course, depending on how that develops, we may also get a bigger move back down first to complete the bigger 3-wave, and then only the upside. Okay, so to trade gold in terms of the context of where we are right now, based on what the pattern is developing, you need to have a little bit of, I would say, experience, okay, in adapting to what the market is telling you. Understand, oh, the scenario of this is higher, but then when the market updates, you need to be very, very quickly to pivot to the next scenario. Okay, so for me, whenever we face with something like this on the market, I always tell traders, probably just want to be patient. Okay, and we just pick and trade those that are like the clearest of all. Yeah. Yeah, so to me, gold, it may not be like the very, very clear or the best opportunity, whereas if you're interested in commodities like precious metal, maybe silver may present a better one. Okay, yeah, those are a couple of things. There's one more over here. Let me just open a chart. That will be on the dollar Canadian. Okay, so dollar Canadian had a pretty nice little run up. Okay, we get a push down and then the pullback seems to be still developing. But for now, we are seeing a bit of a crawlish structure here, right? Okay, so there are some principles that guide us in our analysis, right? We don't just sell the market because we see a crawl, but I'm interested to sell the market. Why? Because we have this top, the market put in our very first impulsive drop. The market is doing a second pullback. And then we have a principle that the market tends to move in three. So what we have is 1, 2, we are lacking the third move. So that led me to anticipate, okay, we may get our third move, and putting in, the channel for visual guidance, putting in the fib, there's a good possibility the market may come back down to this area. Okay, so to complete what? To complete the ABC true move. Okay, so those are the principles that I use, right? So once we have that established, you realize that, okay, when I look for a sell here, we have a crawl. We are not just selling because there's a crawl. We're selling, yes, because there's a setup of a crawl, but at the same time, we're stacking all the odds, right? We have a channel structure. We have the expectation that price tends to develop in three. We understand that, if we're looking at a sell right now around where we are from a context point of view, the risk to reward ratio may be quite significant because our target is where all the way at the bottom. Okay, and price is currently near the top. So with all this in, right, how can we trade or look for a trade on dollar Canadian? As I mentioned, you can stick to the same time frame, pick a minor low, you stop at a minor high, wait for the breakout. Okay, but of course, then that would kind of like have a wider stop, and your risk reward may not be as nice. So what you can do is you can go down to the lower time frame, and the process kind of repeats itself, right? You're essentially looking for that structure, right, that's set up to come to you. Okay, so for H1, what is the closer setup? Potentially, I would say it's a little bit more of a move, maybe going up. And then if you can get a crawl pattern, okay, if you can get a crawl pattern to develop, going back to the upside here on the lower time frame, okay, that would be great. Okay, so kind of draw it out to help you visualize it a little bit. Okay, so if we can get that, we have a H1 cross setup with a H1 double top. 4-hour time frame has already suggested to us the directional bias, and then we'll take this trade here potentially as a sell breakout, and then you can see your stop loss is tighter. Your risk to reward is going to increase significantly. Okay, so dollar Canadian is another pair that kind of having this opportunity, and of course bear in mind that there is a dollar in it as well. So tonight, this evening news and tomorrow news from the US is going to provide that catalyst. Okay, yeah, good. Very quickly, let me open up for questions. We have about maybe 10 minutes for Q&A, and then I'll need to pass the time back to Yijie to do the wrap up. So very quickly, let's see if you guys have any questions, any particular pair you want me to take a look. Okay, put it into the questions tab, and I'll be able to answer it. Okay, yeah, well, I'll give you some time to maybe type it in, just very quickly summarize the opportunities to have it in your watch list. Okay, so we have the pound side of things. I'm looking at the pound dollar as well as the pound yen. Okay, generally I'm looking at sell opportunity on the pound. And then for the dollar side of things, we have the euro dollar. Okay, looking for a sell. Dollar franc, looking at a sell as well. So kind of like canceling out the effect of correlation between the euro and the dollar franc. Yeah, some of you may ask, like, what would happen? What is the probability of both winning? Unlikely, right? But the thing is, you probably not get into both trades either, right? Because we're waiting for a kind of a setup to come in. We're waiting for the breakout trade. So at the end of the day, one of this trade would probably work out and will probably something that we get involved in, and then the other one will probably not follow our analysis and will probably not have a trade in it anyway. Okay, so as traders, I always reinforce this mindset, right? We're not here to be correct. We are here to just basically make money. Okay, so with that kind of mindset and motto, right, the values, right, that you hold, you start to realize that, okay, if I do both analysis here on euro dollar and the dollar franc, if my emphasis on me being correct, then I would struggle a lot, right? Because either one of this may get wrong. Okay, but my view is I'm not interested in proving which one is correct, but I'm more interested in this is what I'm preparing on euro dollar. This is what I'm preparing on the dollar franc. If I get what I want, I execute a trade, and there's a good probability the market will follow the the analysis, the direction, and things like that, and I'll probably make some money of it. And the other one, if it doesn't follow according to my plan, I have no trade, that's it, never mind, right? I'll relook at it, readjust my analysis, adapt to what the market is telling me, and then we repeat, rinse and repeat it. So okay, so that kind of mindset, I think, is something that you want to look into as well if you're still having that internal struggle, like how can both charts looking at opposite direction with dollar in it, yet how we deal with it, right? So I think that hopefully what I've just shared with you can give you that insights into dealing this kind of situation. Okay, same thing here, right? We're selling the dollar Canadian. It goes against like selling the euro dollar, because selling the euro dollar means we're bullish on the dollar, but selling the dollar CAD, we're bearish on the dollar. So as I mentioned, right, I'm not too particular with all this correlation. I'm only using market correlation to manage my total exposure. Okay, so we have those. I think the index will probably need to be patient. I don't think you're going to get anything within the week. And then we have the silver chart as well as gold over here. But gold, I think, not something you want to emphasize too much within the week as well. All right. Good. Two questions I see. A leading diagonal on a higher time frame appears as a ending diagonal on a lower time frame. How do I manage such trades and anticipating the depth of the pullback? Question from EG. Okay, very, very good question. Okay, of course, if you have a practical example that's happening right now, it would be best. But I understand where you're coming from, right? Now, let me just very quickly recall if you can get anything right. I can't recall we have anything now. Okay, but in the past we have this. Okay, gold, right? Of course, right now it's a little bit clearer because it has developed, right? But when the market is developing, then it may not be as clear as what we have right now. Okay, I mean, in trading, hindsight is always the clearest of all. Okay, but how I deal with it is you need to first be aware whether there's a possibility of a leading diagonal on a higher time frame. Okay, usually when the market drops like that, and the very first push that came after the drop, like a massive run to the downside and then a reversal. Following that, we have a crawl here. So it's the very first move after a reversal. Usually, I would be aware that okay, this may be a leading diagonal. Okay, which means it might be a diagonal, it might be a crawl, but it won't be a new reversal because we just reversed. Okay, now how can we expect the depth of the retracement? Gold here is not a typical one because this is very shallow, but oftentimes we'll look out for the let me clear off the gray box. Okay, oftentimes we're going to target somewhere at the starting point of the leading diagonal side of things, right? So you can see this is a crawl pattern. Initially a first impulsive, and then after that it starts to crawl, right? So the starting point of a crawl is somewhere around there. Okay, so that will be our general expectation of the pullback. As I mentioned, gold here, this is a little bit of an outlier because we didn't get that. Okay. Okay, let me use this here. Okay, bear in mind this is not a leading diagonal. I don't expect it to be a leading diagonal. But I think this is a pretty nice little example that we can talk about, right? So if we can't get this, now assume this is a leading diagonal, right? Where are we going to look for the expected pullback? Here. Okay, why? Because you can see this is the start of the crawl move, right? We get a first impulse move, and then that's where the crawl begins. That's usually the target that we expect, right? So if this is going to be a leading diagonal, we expect this to pull back, and then after which a continuation back up, right? So I hope that can answer the question on that. Okay, Mary's question. Oh, BTC and Ethereum, right? So let me open the chart on that. Okay. For me, Bitcoin, Ethereum, you probably want to wait for the pullback. Okay, as I mentioned just now, right? Cryptocurrency, I'm not too keen to sell it. But of course, short term here, we're kind of expecting a pullback. Now, if you're interested in selling it, then the area of interest in terms of the short-term sell target would put you somewhere around the area of 34,400, okay, to the low point area around 33,400 area. Okay. If you're interested to buy, then my take is wait for the pullback first. Okay. I mean, it has a massive run, right? And oftentimes you don't want to be buying at the very top. Okay, and the market usually run in waves. After a strong little up move, it will likely do a pullback. If you are interested in buying it, wait for the pullback to come in first, right? So the area is basically there, right? This is on a H4 chart. Let me open up the Ethereum. Okay, which is more or less kind of similar. Okay, Ethereum on a H1 may give us a little bit more clearer structure perspective, right? We kind of have this here. Okay, right, so we have this. Potentially a three-wave move. Okay, the area here is around 1980 to 2000. Okay, so two ways to get involved. One is this forms a little bit of pullback, okay, and then continue to come down slowly, tag the area, that's a buy. Okay, or from here, this starts to form a little bit of a crawlish structure. Okay, this starts to form a little bit of crawlish structure to the downside. that's also a buy trade opportunity, right? Like this, right? Okay, so I think if you're into crypto, just same like gold and silver, right? Instead of like BTC, I think Ethereum will be very much the focus for the week. Yeah, so I think Ethereum, there's a good opportunity that we can look for a buy. Okay, if you're into crypto side of things, right? So I hope kind of give you an idea and insight into this as well, right? For Mary's question. Good. Okay, so with that, we do have about 5 minutes. I'll quickly pass the time back to Yijie to do the closing and a wrap up for today's session over here as well.
Fantastic. Thanks, Kar Yong, for again another insightful session. I think from the questions we can see many interactions and also many who have benefited from previous sessions and Kar Yong's outlook on the market, right? So for those of you who are not aware, we are actually doing this on a weekly basis. So that's the great news, right? And I want to spend more time today talking about these sessions that we are doing. I think the idea came from the place of understanding our clients require regular updates on the market and in the aspect of idea generation, right? Because sometimes trading on your own can be a very lonely journey. And the great part about this is that there is someone here talking you through the opportunities. And so if you have found this session great, do refer this to your friends, to people who are starting out in their trading journey. Go ahead and share these sessions with those who you know are starting out trading as well. So here's the QR code. Scan it to join next week's session. Register early so that you are reminded, that there's this session available. The other thing that's great that we want to share also is that it doesn't stop here in the area of education, right? We have a free e-course that we're giving away, so curated and taught by Kar Yong himself. So this e-course covers very fundamental modules related to trading, right? Such as fundamental analysis, technical analysis, trading psychology, and more. So in this limited time giveaway, once you receive it, it will be for a lifetime, right? Lifetime access. So your next question will be then, how can I be eligible for this? So all you have to do is to place a trade for any instrument covered in today's session. There's no size restriction. You can place the minimum trade. If you are trading on an MT5 platform, we do request that you put in a comment in your order ticket. Sorry, there's a typo here. So do key in today's date. So that is 141123 LMA. Right, so just key in this comment section over here. This will help us to identify that you are placing a trade for the eligibility of this course, because this is an exclusive giveaway only for attendees of today's session, right? Not everyone else get access to that. So if you have done this step before previously in our previous sessions and you have not received the course, feel free to reach out to us, right? Because we may have missed you in the process of scanning through who is eligible. But if you have done the action, we can backtrack and definitely will give you the course if you are eligible for it. I will skip through some of this very quickly because there's something I want to talk about more importantly. But do scan the QR code for our giveaway. This is for new to Phillip clients, right? Those who do not have an account. And these are for existing clients. So there is something for both of you in our 40th anniversary, right? So more importantly, I want to talk about our community that we have formed. So as I mentioned, trading can be a lonely journey, right? Sometimes you're on your own. You don't know how the market is moving. What are some ideas that are out there? But the fantastic thing about a trading community is that there's always ideas being generated, right? So what's unique about this community is that it is held on WhatsApp, right? I believe that most of you would have a WhatsApp access. So it is a clients only access exclusively for clients of Phillip Nova. And if your question is what's so unique about this community? So here's what I want to share. There are a few pieces of exclusive content shared only within this community. Number one, we share with you the session recording. Right, so there are many questions in the past of, hey, where do I find this? Where can I find the video? So it will only be shared in this community and nowhere else. Right, so we understand sometimes your schedule does not permit you to attend the live sessions, but with access to this community, you can review it in your own time. right? There's also the weekly market commentary written by Kar Yong that is sent out, right? So for this, it is also only exclusively sent in this group, the full report of it on a weekly basis. We remind you with the session sign up for the following week so you can access it all in one place, right? You'll never forget, you'll never ask where can you go to sign up for next week's session. It is all reminded in the group. And there's also daily trading signals in which we share. So really, it is a place where we want to help nurture and educate our clients on what are some of the opportunities and create an environment where, trading is made easy for you. So of course, we understand there is a learning curve, and that's why we have partnered Kar Yong in these weekly sessions to do so. So I strongly believe that this community is a great add-on for you. If you have not already joined, scan the QR code. There will be a few questions for you. Just fill that up and we will add you latest by tomorrow, right? By tomorrow, we should be receiving either an invite or a message if we can't add you in directly. So with that, my name is Yi Jie. On behalf of Phillip Nova, I thank you for taking your time to join us in today's live market analysis session. You can find my email address over there. So if you have any questions that were unanswered, any feedbacks you have for this weekly sessions, or even about our products and platform, feel free to reach me over there. So once again, thank you, and I hope that you have a wonderful week ahead. Thank you, everybody, and bye-bye.